buyers.
All right, everybody. So today's topic is going to be scouting for pre-market setups. This is basically going to help you find quality trades, okay? This is something that you can use, even if it is pre-market, it could even be after hours, but this is just a guide for finding things for the morning of, okay? So first and foremost, I have to give a disclaimer. I am not a financial advisor, and this is in no way financial or trading advice. I am simply sharing options trading strategies that I use and have been successful with in the stock market. This presentation is for educational purposes only, and there are significant financial risks involved with trading, and I am not responsible for your losses in the market should you decide to utilize the information and/or strategies discussed within this presentation. By choosing to proceed, you are acknowledging your understanding of this disclaimer. All right, so what we're going to talk about today is how to screen and scan, how to confirm with Catalyst, supportive sectors, chart and chill, and how to execute your entry. So let's get right into it. Now, let's quickly just go over what screeners and scanners are, okay? So a screener is an essential tool used by stock traders and investors to sift through thousands of stocks to find those that best meets their criteria. Users can apply a number of filters based on fundamental and technical metrics to narrow down their list. And what are scanners? A stock scanner is a screening tool that searches the markets to find stocks that meet a set of user selected criteria and metrics for trading and investing. Scanners can be modified to find the most suitable candidates that meet your specific filters. Now, here are a few tips. What I like to essentially do when I'm creating a pre-market watch list is I like to scan for pre-market gappers, okay? Something that's either gapped up or gapped down. The reason why is because there's a high probability that there will be an immediate reaction to the gaps within the first 2 to 4 hours of the day. Now, you also can look for inside candles or some type of actionable signal. And also, it's even better if you find an additional inside candle on a smaller time frame. So for example, let's just say you're looking at a daily time frame, right? And you see that there is an inside candle, which obviously represents consolidation or trading sideways. Because we know that we can't trade sideways forever, there's going to either be a break to the upside or the downside. But let's say you find that inside day candle, and then you move over to something like a 4-hour chart and you also see an inside candle, that makes it even sweeter for you. That's an even sweeter setup. Now, you can also cross-reference all of these with a volume scanner to see what is moving pre-market. So here's a few tips. A free screener or scanner that you can look at is one on Thinkorswim. You can go to usethinkscript.com and it'll give you literally a list of screeners that you, or scripts rather, that you can use to run through Thinkorswim. You can also manually go to Finviz. So let me show you what that looks like, okay? So we're gonna just start with the first tip that I gave. Looking for pre-market gappers, okay? So for example, I'm on a 5-minute chart. I'm just gonna go over to the S&P 500 to show you guys what I mean about essentially we will within the first 2 to 4 hours. Can you guys hear me clearly, right? Can you hear me? It's showing that my connection is acting a little bit funny.
Well, when you start mentioning that you're
right, can you hear me?
Yes.
Okay.
Can you?
All right, good.
Yeah, like sometimes, like when you was talking about about your connection, it was starting to buffer. But other than that, it's been good.
Okay, cool. Just making sure.
Yeah.
All right, so here I am. Here I am on a 5-minute chart, right? So if you can look at this chart, you'll see that, all right, we gap down, and typically within like the first 2 to 4 hours, we normally come back to respect that gap. All right, so same thing over here. If you look at this, we gapped up, and obviously we didn't come back to fill this gap on this day, so that's not a good example, but let me just move over to something to show you exactly what I mean. All right, so if you can look at this chart right here, we're on a 5-minute chart, and you see how we gapped up. Typically, like I said, within the first 2 to 4 hours, we may come back to respect that gap. Now, there are a lot of tickers that actually follow the trend of the S&P 500. So chances are, if I were to move over to something like Microsoft or Apple, they more than likely have the same type of setups, okay? So that's first and foremost. Now let's move over to Thinkorswim and let's look at a screener, or I'm sorry, a script. So I'm going to come over here to the scan tab. Now, there are a lot of pre-made scripts that are already within Thinkorswim, but again, you can go to usethinkscript.com to find various scripts for whatever you're looking for. So right now, I have it on a pre-market scanner. Obviously, it's going to work pre-market, but let's just go here and see. Let's load a script. So if you come here, these are all of the scripts that I personally have, things that I like to look for. So I may come here and I may want to look and see where the volume is in the morning. If you guys have ever seen me in the morning putting out, okay, Apple has volume this morning or such and such has volume this morning, that's because I come to my pre-market scanner and I'm scanning to see what has volume in the morning or what has morning momentum, okay? So that's something that you want to do. You can cross-reference whatever you find with a volume scanner. You do also have another option. Let me go to FinViz. Okay, so you have another option, great, I'm logged in, where you can actually go to FinViz and you can input any type of fundamentals or technicals that you may want to look for. Some of you have seen this before, and if you haven't, you would just come over here and you would start to fill out things that accommodate whatever you're looking for. Okay, so maybe I'm looking for mid-cap stocks only. Maybe I'm looking for it to have an average volume on any given day over 500K. Maybe I'm looking for an average true range of at least $1. So you would just come in here, make sure that it's optionable because obviously we're trading options. Put all of that information in, and what it starts to do is it starts to bring up a list of tickers that you can actually utilize for trading based upon the criteria that you put in there. Look for things that you're familiar with, okay? You see Apple on here, everyone's familiar with Apple, Airbnb, things of that nature. This is how you can use a screener or a scanner. Now, let me go back to where we were. Come on, Kayla. I think this was it. All right, cool. So that was Thinkorswim, and then we just looked at FinViz. Now, your other option, obviously, is to go through a watch list manually. And I had a one-on-one today where someone asked me, how do you even find the tickers that you put on your watch list? Well, one of the things that I said is think of companies that you're already familiar with. You can also go to, for example, you can look within ETFs, right? So you can look at the top holdings within ETFs to see what the top holdings are, and you can add those to your list. You then want to cross-reference it to make sure that they are highly traded and very liquid. You don't want to put things on your watch list that you're using every single day that nobody else is trading, no one else is looking for. That's just a waste of time. Now, there's also paid subscriptions like Benzinga that is extremely fast, lightning fast, that will give you a lot of information. You can see large orders, you can see call sweeps and things of that nature. With those paid subscriptions, obviously, it's going to give you faster data, and it's going to give you a lot of things that's going to help your trading. Now, they're not cheap, but I mean, if it's something that you want to purchase, then that's an option for you. And also FinViz has an elite version that you can pay for as well if you're wanting to see, more data. Got me? We good? All right, cool. So now you want to confirm with Catalyst. So let's just say you found the things off of your list, off of your, for example, your pre-market gappers list, or you're looking for things that have volume. You're looking for things that, maybe have an actionable signal. If you're trading the strat, you're maybe looking for, 2-2 reversals, or you're looking for inside candle breaks and things of that nature. The next thing that you want to do is you want to confirm with Catalyst. This is how you narrow down your watch list. You go, you find your ticker, and then you go to Yahoo Finance, or you can even go to FinViz, right? So a lot of people are not aware of this. When people ask, what's going on with this stock? What just happened with them? So what you can do, I'm going to take you back to the home screen just to walk you through. What you can do is you can come here, and for example, Oxy has been booming. Kudos to Ray for that. Oxy has been booming, right? Well, if you kind of want to know what's going on, you can scroll down and it's going to give you all of the news on that particular ticker. So let's just say you have this stock on your watch list and you think that it's going to be bullish. You want to confirm with Catalyst. Go see what catalyst is out that's supporting that particular stock doing what you think it's going to do, okay? Hopefully that makes sense. Does that make sense, y'all? Give me a 5 in the chat if it makes sense. Okay, cool. So you can go to Yahoo Finance. Essentially, what you're doing, like I stated before, is you want to find out if there is any supportive news that is very current. It needs to be current, and that is in favor of the direction that you're anticipating the stock to take. And to the left, you guys can see the various websites that I put on there that you can find out information on that particular stock or security. All right. So now here's another thing. I know a lot of us have a hard time narrowing down a watch list. We may see, 10 to 15 things that we like, and we don't know how to narrow down that list so that we choose essentially the best ones on that watch list. Well, let's just say you have 10 or 15 stocks. What you can then do is move over and find a supportive sector. Okay. So what you want to do is whatever that ticker is, you want to see if it's moving within a sector that, of course, if you're thinking it's bullish, is that sector bullish presently? Or if you're thinking that it's bearish, is that sector bearish presently? And you can weigh it against that. Now, another tip is that you can look within sectors, even if you don't scan, you can actually go and look at sectors. And let me just walk you guys through that so that you can see it as I'm saying it. I think it was under something else. All right, so here we go. So right now I'm on sectorspdr.com, right? So as you can see here, you can take a really quick glimpse at what sectors are leading and which ones are declining, right? So for example, you can legitimately click on a leading sector, right? Which is XLE presently. That's the most leading, but some of these are also bullish, right? So now you can go over here to index weight, tap it 2 times, okay? That's going to bring up the most heavily weighted ticker that's within that sector, and it's just going to weigh it out in order, okay? So now you see within this sector who has a heavy weighting. We have ExxonMobil, which is XOM. Okay, we have Chevron. So you can look at it like that. So if the ticker that you have on your watch list has a pattern or a setup that you like, you can also come over here to see if it's within a sector that's supporting what you think it's going to do. Okay. All right, cool. And also, I failed to say this as well. These are a few of the websites that you can go to look at sector rotation, which is extremely important to help you to have the highest probability setup. But you don't always have to look for a sector that's leading. Let's say you're bearish. You want to see if that stock is in a declining sector or a bearish sector at the moment. So that can help support what you're anticipating that stock to do if you're thinking that it's going to be bearish. You don't always have to look for what's leading, okay? You want to be able to be a very diverse trader and trade both sides. Now, here's the fun part, the chart and chill. What you have to do, and what I like to tell people to do all the time, is you want to check the ticker, make sure that it's liquid. Do not chart anything, you guys, without first checking to see what the spreads are like, okay? It will suck like crap if you find something and the chart looks beautiful and then you go over to the options chain and the spread is extremely wide, okay? Or no one is trading it. There's no volume there. There's no open interest there. So do that work first, okay? Make sure that before you even start putting levels on your chart and going through that entire hassle, that you're making sure that that stock has good volume, good open interest, good Greeks, a good spread, okay? And then from there, you're going to map out your levels. So if you're someone who uses indicators, map out your levels of support and resistance. See if you have any type of setups that you like. If you're someone like me that trades crossover patterns on your EMAs or crossovers on the MACD, you may want to map out your levels and stuff on the chart. Or if you're trading a strat, which is something that I also trade, you want to look for your actionable signals like your 2-2 reversals, your inside candle breaks and things of that nature. Lastly, figure out the stock's average true range or the ADR. Now, a lot of people struggle with figuring out strike prices. I had someone today who didn't quite understand what the ATR is. It's basically an indicator. It's not an indicator that's showing you the direction of the stock. So please don't think that's what it is. What it is it basically lets you know, based upon the time frame that you're looking at, what the stock is capable of doing. So let's just say I had, and let me try to pull up something that may already be on my list. Something that I have levels on. Give me 1 second here, everybody. Okay, so let's just say I'm someone who's waiting for a break above 176.75 on Apple, okay? If I were to weigh that against my ATR, let me make sure I have an ATR on here. If I were to weigh that against my ATR on the daily time frame, I would basically say to myself, okay, well, I'm scrolling over, keep your eyes peeled over here to the bottom left of my chart. We're on a daily chart. I'm trying to figure out what Apple has the potential to do. So I see that we can easily do $4, easy, okay? And even if we run up more, I just made more money. But let's just say I'm someone that says, once Apple breaks above 176.65, I'm gonna take a position. I'm just gonna round that 176.65 up because I know that there is not, that type of a strike price within the options chain is going to be whole numbers, right? So 177. So let's just say at 177, I decide that I'm going to, at 176.75, I'm going to get into a position for calls, okay? Well, I'm just gonna round it up and say 177, and then I'm gonna add $4 to that because I know that Apple has the potential to run $4. So that's gonna put me at a strike price of 181. So I know that when I go to my options chain and I'm looking to get into a position for Apple, I know that what I can look at is 181 at the most, right? There's not a 181, but there is a 180. So I have to stay within this range because I dare not go out to 182 if I'm day trading, okay? Why am I on April 1st? Give me 1 second, y'all. Oh, okay. I'm sorry. My mind is somewhere else. I'm thinking of SPY. So this is correct. So, okay, I cannot choose the 182 because that's putting me further out of the range that I said we could do. So I have to average down to 180. So this is my sweet spot. I can choose at the furthest out if I'm going to be day trading. I can choose the 180 strike price. Again, this is a day trade. I can choose the 180 strike price at the furthest out of the money that I would go. Or I can choose any of these two, okay? So now you know how to choose your contract based upon the average true range. And obviously your ATR is going to adjust itself depending on the time frame that you're looking at. So now I'm on a weekly chart. So let's say the same thing. If I'm waiting to break above 176.75 to take a position, I'm going to see what Apple has the potential to do. Okay, I'm seeing it can do $6 easily. So I would just add $6 to 177. I'm just going to round it up 177. I would add $6. That's putting me at 183. So that means that if I decide to hold it for an entire week, the most out of the money that I would go would more than likely be this 182.50. So I'm playing within this range right here, the 182.50, or I'm getting closer to the money and choosing these. All right. So hopefully that makes sense to you all. Okay. So now that we figured out what contract we can choose, you want to write these things down. You want to write down your trade idea. You want to set alerts within your charting platform or your brokerage. And the alerts are pretty cool because it will send you a text message, especially in TradingView and Thinkorswim. It'll send you a text message when something triggers an entry. You can legitimately put in the notes on your alert what the trade is that you're supposed to take once it triggers. Obviously, you do not want to jump right in. You want to go over to your chart. You want to make sure that it's supported by volume, okay? And this is how you execute your entry. Make sure the trade is supported by volume on the charts. And when I say volume, I don't mean this type of volume. Of course, you need this volume on your options contracts, but the volume that I'm referring to is the volume down here, okay? You want to make sure if you're bullish, are the buyers still in? And if the buyers are still in, how are the ticks looking for the volume candles? Are they looking relatively strong or are they looking relatively weak? You need enough volume to help it to push into the direction that you want it to go in, okay? And then from there, you want to make sure that you're entering in at a key level. I say this all the time. You do not want to be the person who enters into a trade near a wall. So for example, let's just say this is where I just decide to hop in at where I have this red line. Well, I know that this next level right here at 176.75 is essentially a resistance. So what if we hit that resistance and fall back down? Kind of like what we did over here. We hit this level and we fell back down. This is a lot of money to risk for little reward. Instead, what you would want to do is wait until you break above this particular line so that you have an even risk to reward, okay? So make sure that you have a key entry when you're getting into that position. Okay, so now the last thing is to make sure that you are sticking to your trading plan. Stick to whatever your profit target is. If you have a 30% goal for the day, if you have a 40%, whatever your goal is, make sure you stick to that. Once you hit what you need to hit, be okay with exiting that trade. Or what I like to teach people to do is if you have multiple contracts, once you hit your profit target, it's nothing wrong with scaling out. And if you have enough contracts, leave some runners. That way, if it breaks above another level, you can continue to make money, but you're not risking every dollar that you put into that trade, okay? So hopefully this presentation made sense to you guys. Now we're gonna open it up for question and answer. But also before we go, I want you all to know that you can follow us on our social medias, okay? So if you're looking for me, all of my stuff is the same. It's iCurlyK on Instagram and Twitter. There you have Ray's information. Hopefully I spelled everything right. And obviously we know a lot of people are getting misled by fake pages. So these are our actual Instagram and Twitter pages. So make sure that you're not getting scammed, okay? So that brings us to the end of this particular presentation. If anybody just hopped on here, because I'm seeing people coming in, if anyone just hopped on here, please know that there will be a recording posted in Wealth Squad University within 1 to 2 days, and you can go back and you can watch it. But if you have any questions, we're going to go ahead and open it up for question and answer. So we have 2 people with their hands raised. Ray.
Hi, thanks for class, Ray and Kay. Can you
No
hear me?
problem. Yes.
Yeah, I was just wondering if it was absolutely necessary for your strike for you to be in the money when your strike price hits. Like for the Apple example, you said not to stray farther than $4 out of the money. And I was wondering if that was just preference because if correct me if I'm wrong, but the farther out you are, the cheaper the contract is, and as long as it's heading towards your strike price, you'd be able to make money.
Absolutely. You are not required to hit this. You're not required to hit the strike price in order to make money. Okay. Now, obviously, there are certain things that are going to affect that. So if you are too far away for the money, or if you're at your expiration date and you're not in the money, then obviously you can lose money. But let's just say I decide to get into a trade today on Apple and I choose a strike price that's out of the money. As long as we're trending towards that particular strike price, and as long as it's still attainable, I have the ability to make money. Now, the closer that you get to expiration date, you have things that are going to heavily impact that, like theta decay, the fact that you have not reached your strike price yet. But as long as you're trending and you still have time, you'll start to see money being made in your account.
Okay, all right, thank you.
No problem. So I know a lot of people are like, when we choose out of the money strike prices, I know a lot of people are like, well, how are you making money? You know what I mean? And it hasn't hit the strike price yet. Well, it's trending that way. So that contract is becoming more and more valuable because obviously it's trending towards that. And so more people are investing in it, which is pushing the premium. Okay. So you don't have to hit the strike price in order to start seeing profits in your account. All right, next person.
Hey, what's going on, Kay? What's going on, Ray? How y'all day going?
What's up?
All right, I have a quick question, right? Because as far as like the spread, right? I had a situation Friday where I played the firm. Well, I didn't play the firm. I charted the firm to the downside, But when I went to go look at the strike price, as far as the option on contract, it was a big difference in the spread. So I didn't get in because I didn't want it to reverse on me. And then, I'm stuck with the contract. But then later on, when I'm looking at a firm, it went to the downside and I looked at the contract again, then the spread was, I think, $2 difference. How would you go about playing that, for instance, like that?
Okay, so I'm trying to grasp what you're saying. So you said when you got into, and can you just repeat that for me? Because I think what I'm understanding you to say, I that's probably not what you meant.
All right, so I looked at a firm on Friday for Lotto Friday,
Okay.
and I was looking at a put, but when I looked at the strike price, as far as like the contract, it was I think like a $25 spread between the contract, right? So I didn't get into it because of the spread, the bid ask spread.
Okay.
But later on, as the day went on, a firm went to the downside, right?
Okay.
It did all of the action that I wanted it to do, but when I went to go look back at the option contract, now the bid ask spread was in range, like $2-3. How would you go about playing that?
Okay, so the
Yeah.
spread got tighter because the volume more than likely started to pick up. So that's a very good thing that you asked that. Volume on the, and for anyone who's wondering what he's talking about, for example, right now, as you can see here, this is basically a $7 spread between the bid and the ask, okay? Now, generally, the spreads are wide when people aren't really trading it and it's not a lot of volume on it. But because a firm started to tank, the spread became tighter because the interest started to pick up. So essentially, that's what you want. When you're trading, you want enough volume there for it to be liquid. When I say liquid, I'm talking about the ability to get in and out very quickly. The wider your spread is, let's just say there's a $50 spread. That means the person that's asking, if they are just in a hurry to get out of that contract, they're going to have to sell it at a $50 loss. Or if someone is really trying to get in this contract and there's a $50 spread, they're probably going to have to pay $50 more than what they want to just to get in. So that's what I mean about your spread. So the reason why the spreads tighten because the volume more than likely started to pick up. Make sense?
Yes, it makes perfect sense. Thank you so much.
No problem. I love it here. All right, who's next?
Okay, I have a quick question regarding your scanner in the Thinkorswim. When you showed yours, you said you had yours already on the Premarket. How can I set that up to see that?
Okay, so let's go here. Hopefully you guys can still see my screen. So in this channel that everybody hates, where we put our brains into, me and Ray, here is a list of scanners, ones that we actually use. So if you click on this list right here, Goldmine, this is literally a bunch of scanners that you can use. Okay, so the ORT breakout, the EMA9, VWAP crossover, pre-market scanner right here is on there. You can look at this right here and it has a lot of different scanners on here. All you have to do is load them obviously into Thinkorswim. That's legitimately it. Okay.
Okay, perfect. Thank you.
No problem. What's up, y'all? Who's next?
Hey Kay, how are you?
I'm fine. How are you?
Good, thank you. I have two questions for you.
Okay.
So one of them is how you mentioned about the volume bars, right? Let's say I'm almost going to enter a position. Should I be looking at the volume bars on the daily trade to support my thesis?
So it depends on how you plan on trading. So if you're
intraday.
okay, so intraday, look at your smaller time frames. Make sure that the volume is feeding the larger time frames. If you're doing day trades, look at the volume on the smaller time frames. You can compare that to obviously your 15-minute, but essentially what your time frames are is just a way to break down data. Okay, so just make sure that you're paying attention to the chart that you're using to get into your trade.
Yeah, I use the 15-minute.
Okay. Okay. So make sure the volume is there on the 5 and the 15, because your 5 minutes are going to feed your 15.
Okay, I see what you mean.
Yeah.
And then my other question is about the sector. I
Uh-huh.
checked out that website that you were showing, but it was a little different for me. Is that like a paid service that I should
No,
get?
no, it's not. Sector SPDR. What's different about
Yeah.
it? Let me know so I can help you.
On yours, like there was green bars showing like the strength in it.
Okay. So right here.
You see the green bars on the right side?
Oh, right here.
Yeah, yeah. When I went, I didn't see those. Where do you click?
I
Oh,
just
tools. You go on tools.
yeah.
Okay. And
Is
then
it
if the sector you check and then you see that big bar, right? If it's directional on the daily, is that what you're looking for a day trade or directional on a weekly?
if you're day trading, if you're day trading, there's no, well, I won't say there's no reason to look at the week. Okay. But if you're day trading, you have to think about this. A lot of longer time frames are just going to be noise, because the day, if you're intraday trading, you're looking at smaller time frames. That's the equivalent of if you're trying to get into something and get out of it within the day. Why are you
Mhm.
looking at the
Yeah,
week?
that's what I do.
Why are you looking at the month? Now, I say that, but I also want to give you a little bit of information too about continuity. So let's just say you are looking at the week. You can, in this particular instance, look at the week if you're just trying to see if continuity is in your favor. Okay.
Mhm.
So basically saying, okay, is the week green and I'm trying to get into a call on an intraday trade. Okay, that may help you. But if you're trying to if you're looking at the week just to do a day trade, that's a bunch of noise you don't need.
Yeah. Now I'm
Okay?
talking about like the watch list creation part.
Mhm. So what do you mean by that?
Like what sector is Boeing in, for example? I'm not sure that's what I'm asking.
Boeing. Ray, help me out. Wait a minute. 1 second. 1 second. Matter of fact, let me do it like this. Over here. Okay, so electronic tech. So I don't think it's tech though. Ray,
Let me try to look it up too.
Yes.
what sector is Boeing in? Do you know?
Hold on. It's
Somebody.
probably gonna be something travel related.
Yeah.
Like, let me see.
And if anybody's wondering what I was just looking at, I was looking right here because it says electronic tech.
Let me make it easier. Let's say we're looking at BAC, which is the XLF sector, right? On the watch
Yeah,
list.
XLI, like
Okay.
Amanda said.
XLI. Okay, so let's say I want to have Boeing on my watch list. Would I look at XLI to make sure that it's like not choppy? It's a directional bar on the daily,
You
just
can.
for like narrowing down the watch list.
You can. That's exactly what I was talking about. So you can look to see, let's just say you want to get into calls on it. You can look to XLI to see what XLI is doing as a whole, right? You can see
Yeah.
what it looks like if it's showing that it's pretty directional. You can also see if it's a leading sector to help to confirm what you're trying to get into. So yes, I would definitely
For
say
sure.
that. Mhm.
Thank you. Appreciate you guys.
No problem. No problem.
Hi, thank you, Kay and Ray, for doing these classes. You guys are always amazing. And we always learn so much from you guys. So thank you, thank you, thank you.
No problem.
Kay, earlier when you were talking about the Apple stock and making sure that there was enough volume and
Mhm.
that the buyers were buying in. Can the one that we're looking at right now, like one XLI. So the last two green ones, would that be considered like a good volume to buy in at that point?
For
Or
sure.
would you want something stronger than that? Or
No. So let me make it easy for you. There are a bunch of indicators that you can use, like the relative volume. I don't use the RVol. I just use the regular volume. It makes my life easy. So this is my volume indicator right here, right? And I tell people all the time in the community to go into your settings. As you guys can see, things on my chart are, the colors are changed to fit what I need to see, okay? And I always do this, but I digress. You go over here to the volume indicator, go into settings. This right here is normally turned off. So as you can see, that yellow line that was on my volume is no longer there. That yellow line is actually a moving average with a parameter of, what is it? What's my moving average? Why is it not doing it? Let me just see in here. let me see what the input is. Okay, so 20. It's a 20 period moving average. So that basically means it's giving me an average on how much we moved volume wise over the last 20 periods. So what I tell everyone to do is turn this moving average on, play around with the colors, do whatever you want to do, go ham, but turn that moving average on. So what that basically shows you is, why did that adjust that? That was crazy. What it's basically showing you is, are we below average volume? As you can see right here, we're below average volume. And then look at what the candles did. Now, granted, this is a 5-minute chart, but it still means the same thing. Look at what the candles did. They traded sideways. It didn't have volume. And then once we started to get to normal and above average volume, you see a clear direction to the downside. And then you see a clear direction to the upside. So that's what I mean.
Okay, that makes perfect sense. And the other thing that I wanted to ask you is that in the options chat, a little while ago, well, not a little while, it's been about an hour or so ago now, you mentioned a tool that that was like the bars pattern tool. I tried to do it on my Thinkorswim, or my Trading View, but I couldn't make it work. Can you show me what you?
Sure. I'm gonna reference what she's talking about. First and foremost, I was helping someone out, and I've been watching him. I watch a lot of people in the community who are literally just really eager to learn. So this gentleman right here, he was looking at SPY, and he's basically trying to show what he feels is going to happen, right? So I'm just going to give you an example. I'm not charting anything, okay? So I'm just literally giving an example. No charting, okay? Not right now. So I don't want people to say, oh, it's getting ready to do that. No, this is legitimately just an example. So I have this bars pattern right here. This is what I was showing him, but I think he picked something else. So what you can do is, let's just say you think that XLI is going to do this to the downside, or no, let me just say it's going to do this. So let's just say you think it's going to make this same run all over again. What you would do is you would kind of highlight over it, right? And what it will do is it'll do that for you, and you can grab that and move it over. So if you're ever trying to show someone what you think it has the potential to do, you can do that. So now you can see, okay, well, here's an example of what I feel is going to happen. The reason why I told him that is because he was trying to show us what he was predicting. Right. So I said, if this is what you're predicting is going to happen, here. So he drew this right here, and he's saying he believes it's going to do that and then come back down. So I was just showing him a way to make it, right in a sense. But
okay,
the way grabs works. All right, cool.
All right, thank you so much. I appreciate your help.
No problem, no problem. He must be on this call. He must be on this call because he just did it. All right.
Hey, Kay and Ray, how's it going? Happy Sunday.
Happy Sunday.
So my question is, I guess it's more of a personal preference question because I've been maybe having a little trouble with, or I'm trying to be more strict with my risk management side of things, which comes with setting stop losses. But I realized on a couple plays last week, I lost money and my stop loss was triggered. And then I'm trying to be rigid in sense, like I don't want to lose a lot of money, but I guess to get to my point, I'm trying to ask you, what is there ever a time in your maybe personal experience where it's appropriate to average down or hold, or should you always just kind of let your stop loss hit? Because, I see this happen a lot. Your stop loss triggers and then things go the other way, right? And then you're sitting there like, dang, I lost my buying power for the day, or I lost X amount of dollars and I could have trusted XYZ. But I've also read around and people are like, always just set your stop loss. It takes the emotions out of things. So I don't know, where on the spectrum do you determine what's appropriate if you have a process that you go through?
That's going to vary based upon the traders that you talk to. I'll just be honest with you. I am not an average down girl by any means, because in my opinion, averaging down is just a way for you. Let's just say it still doesn't do what you want it to do. You spent more money to lose, in my opinion. So I'm not an average down girl. I'm okay, if it hit my stop loss, I'm stopped out, I get out. And if it does turn around, I'll be looking and waiting for it to turn around and do what I wanted it to do versus spending more. Because when you're averaging down, you're spending more money into a loser potentially. You never know. So I would rather cut it and stalk it and wait for the right moment for it to do what I thought it was going to do. But again, that's going to vary from trader to trader. You have some traders who average down, like will keep averaging down and keep buying a dip and the dip keep dipping and you got too much dip on your chip. That's not me. That's not me. What about you, Ray?
No, I ain't with that averaging down stuff. Sometimes you just gotta take your loss on the chin.
Yeah.
When it comes down to it, too many times people are trying to find a for sure way in a market that ain't nothing for sure. So
Yeah.
that type of, it's hard. You can't be logical in an illogical market. This stuff is illogical. So like you can't be sitting up here trying to be like, well, I should have held because it came back. Well, what if you held on the next play and then it keeps dipping? So it's like you just gotta take your loss on the chin. You're gonna lose.
Yeah. Now I say that about options, and obviously this is an options call, but like, for example, if it's buying shares or something like that, and you have a better chance to get it at a lower price and lower your average cost basis, and there's no expiration date tied to that, and it's a stock that we can't live without. You know what I mean? Like, for example, if it was like an airline stock, there's certain places we can't get to without airlines, right? So I would be okay with averaging down on something like this because I know that chances are it's going to reverse. It's just a matter of when, unless that company goes out of business. For shares, I'm okay with averaging down, but when it comes to options, no, I'd rather cut it and you can always re-enter. What's up, y'all? And what you got to say? Who's on the microphone today?
Sorry, I muted myself. I just want to say thank you for your response.
No problem.
Yeah.
No problem.
I guess while I have you here, because I don't know, I'll get to the chat. I'll ask my two-part question.
Okay.
So I guess what advice would you then give to someone whose stop loss is triggering too early? Or would you say it's more they're being conservative or too conservative, or that their entries are just poor? I mean, obviously it could be a combination of both. I'm not saying you have the answers, but again, in your experience, would you say risk, you have to define or open up your risk tolerance a little bit more, or you're really going to have to just be a sniper, a little bit more of a sniper?
Well, listen, you chose that stop based upon your risk tolerance, right? So that's going to vary. That's up to you. I can't tell you to open up your stop because you chose that stop based upon what you're willing to lose. You know what I'm saying? So that's something to consider. Also, are you having the highest probability setups? You know what I mean? Like that's another thing. Because if it's triggering that quickly, is it really a high probability setup? Are you viewing the charts the right way?
Yeah.
I mean, so that would be the next thing. Other than that, I would say, that would really be it. Like only you know what your risk tolerance is. You know what I mean? Like,
yeah.
For example, certain people can afford to lose $10,000 and take it on the chin like it's nothing. And then other people are like, man, if I lose 100, I'm gonna be crying. That's just, you know what I mean?
Right.
That depends on you and what you have going on.
Makes sense. Okay. Well, I won't take any more time, but thank you. I'm sure I'll be in the chat anyway, so we'll get back to it. But
okay, cool.
Yep.
Did y'all hear my rap? Did y'all like it?
No.
Do it again?
To the person who asked about MTTR, if you want to buy shares, then buy shares. MTTR is like $7.66. There's no need to chart that just because institutions are buying it. MHINIT was cracking.
Hey, what's up, Ray? What's up, Kay? Thank you guys for doing this. I appreciate it. You guys doing a great thing. Ray, well, for both of y'all, I got a question. Well, two questions. Kay, the indicators or the scans that you showed earlier for TOS, do they have that for TradingView?
TradingView has a screener. It's down here, but I'm not gonna lie to you, I've never used it.
Mm-hmm.
Yeah. So
Okay.
YouTube is your friend because I've never used it. I use, Thinkorswim. I've used Benzinga, I've used FinViz, and I use RunStrat.
Okay.
Yeah.
And which one you like the best? TOS?
It really depends on what I'm looking for and how easy I want something done. So for example, like when I'm using FinViz, no lie, I go to FinViz to look at like all the current news on that one ticker, or I go to FinViz if I'm trying to find stocks that are below all moving average, because I use those to do my buy and holds, or I use those to scout for like a real beautiful run to the upside. Okay. And then I'm going to use RunStrat if I'm just being lazy and I want RunStrat to tell me right now who has inside days, or who, you know what I mean? Like the lazy stuff, I go to RunStrat for that.
So RunStrat is for like day trading or intraday or?
No, RunStrat is, let me show you.
Meaning like you got a different scanner for the different kind of trade. Like if you're going to swing, you use one scanner. If you're going to intraday, you do another one.
Yeah, like this is the sentiment, right? So if I'm feeling lazy and I know I got to get some work done, I'm gonna go to RunStrat, because RunStrat gonna tell me who has an inside day or who has a strat setup that I like. Very simply, make it real easy. All I got to do is go to the chart. A lot of people in the community use RunStrat, and you'd be like, oh, they know what they're talking about. Oh, they found the inside day. They just did that. And then I will go to Thinkorswim if I'm trying to find like, where's the momentum, because it's something very sexy about the layout in Thinkorswim. So who has the volume? What's moving pre-market? I go to Thinkorswim for that. But 9 times out of 10, I'm not the laziest person. So I'm always manually going through my watch list every day. Mm-hmm. Or I use Thinkorswim to find pre-market gappers, because like I said, typically within the first 2 to 4 hours of the day, we're going to, in most cases, respect the gap. We may come back and fill it. In most cases, not all. So it just depends, like how are you feeling that day, or what are you trying to look for? I can't give you like a cut and dry answer, because it just depends on what I'm looking for and how I'm feeling that day.
No, I appreciate that.
Problem.
Second question was the strat. So Ray, I looked at your video like a few times on intro to the strat, and thank you for that also. But like something's still not clicking. Like when do you actually use to like to get into a trade? Is it on the 1 or is it on the 3?
Not the 3.
I mean, there's multiple strat patterns. So you use the strat patterns to get into the trade. So whether it's a 2-1-2 reversal or a 2-2 reversal or 2-2 continuation, like you use the strat cheat sheet for that.
And what he's talking about is right here. He put a new the updated one into the community. I'm trying to find, there it is. He's talking about this right here. So you have to figure out what patterns you like. When it comes to trading, all trading really is finding something that works for you and sticking to it and not reinventing the wheel. So like if you're someone that likes to trade off of inside candles, which is the 1 candle, then stick to those types of setups. If you're someone who likes 2-2 reversals, stick to those setups. You see what I'm saying? So that's really what trading is. It's not trying to figure out who has a good strategy. It's what strategy works for you.
So if I'm doing like an intraday and let's say I'm looking at the 5-minute, and then, I'm looking at the 5. I'm going between the 5 and the 15. I'm looking at the 5-minute, and then one of those setups come from the cheat sheet. Am I waiting for the 3rd candle to fill, or do I make the move on that next candle?
You make you make the move when it's a break of that particular pattern. So for example, if you're trading off of an inside candle, so let's just, where did I go? Let me look at RunStrat. See, we can be lazy right now.
Yeah, I don't know how to use RunStrat, so that's cool.
It's nothing you really got to use. All you got to do is just go there, right? And if you're looking for inside candles, you just put, I'm looking for inside candles. We're on a 5-minute chart, but let's just pretend that we are on a 1 hour, whatever the case. Let's just pretend. So essentially what you're doing is and matter of fact, let me put the numbers on there so everybody can see. We'll do it like this. And let's use a previous a previous break. Here's one right here. So let's just say you are saying, I'm going to get into calls if it breaks above this area right here, right?
Okay.
Or I'm going to get into puts if it breaks below this right here, right? So
Okay.
essentially what you're doing is you're waiting for the moment that it breaks above this particular candle and you're taking your entry. Now, when I say that, you're saying, are you waiting for the candle to close? No, you're waiting for the break of this particular line, and you can obviously scale it down to a smaller time frame to wait for that break, okay? But when you're trading the strat, it's a lot more that you have to consider. It's not just a break of this particular line. You also want to make sure that there are other things that's confirming your move, right? So for example, make sure that the volume is in to support it. And don't just make sure that the volume is in, make sure that the volume looks consistent. You know what I mean? Don't just have one large candle and then everything tapers off. Make sure that the volume looks consistent, okay?
Mm-hmm. So just 1 second, if you could go back to the candle that you just indicated a second ago.
Uh-huh.
Yeah, that one, exactly, right there. So like the red candle, the downward candle. So I'm just assuming the 3, I would get in somewhere around when the 3 candle is still forming, or
Yeah.
I would set my limit somewhere around there to get in.
So I think you need to kind of get familiar with this cheat sheet. So let me show you what I mean. I'm gonna pull up the cheat sheet. Wait, I think I already have it up. Mother scruncher. Hold on 1 second, y'all. All right. So for example, right here, right, we are looking at a 2-1-2, right?
Yep.
So essentially, that's what that pattern just did. It did a 2-1-2. Okay. So what your entry is going to be is the moment it breaks above this particular line. That's why it has your entry right here. You see that? So when this candle, as it's forming, right, it opened here and then it starts to, incline. And the moment that it breaks above the high of this inside candle, that's where you take your entry.
Okay.
Okay.
But, and the entry, that means it's in the money, right? Because it's already going up, correct?
No, you are confusing. You are confusing things. So,
I am.
yeah. So okay. In the money basically means that we have already hit that price. In the money. In the money means that, okay, if you're doing calls, and let's just say the strike price, the current price of the stock is $10. Yeah. In order to get to 10, you have to hit 9, 8, 7, 6, 5, 4, 3, 2, 1. All of that is in the money because we've already hit those prices. Yep. Does that make sense? Yep. If we're doing calls, out of the money would be where we have to get to, okay? So out of the money would be if the stock's price is $10, out of the money is $11, $12, $13. Does that make sense?
Yeah, no, I understand how that works. I was just looking at the candle thinking like if my my entry is, what is that, 166, 166.90? And I'm seeing like the 3 is on the way up. The strike price, the strike is 166, right? So
no, that's not your strike, that's your entry. Your strike price is what you think the stock can hit. So your strike price is saying, okay, well, I think, okay, so for example, this would be your first target, right? If you were to take that position, okay? So, and so that 168.19. So let's just say you chose come on, Kayla, you chose a strike price of 168. Okay. 168 is what you're saying you think it can hit. That would be your strike price, right?
Okay, yeah, okay, got it. Because I was thinking the strike price was the entry, but you just made it clear. Okay,
no
got
problem.
it.
No problem.
Yeah, that helped a lot. Thank you guys. I appreciate it.
No problem. And like, we don't, everybody, we don't enter off of threes. Threes are like a 1-bar reversal candle. Whatever color the candle is right now, the other party was winning at first. So basically, since this candle is green, we're on the daily chart. Since this candle is green, that means that at one point, the sellers were actually winning. When you look at it like this candle went this low, right? And then it broke below the previous candle. So it went that low, which means that candle was red at one point. It's considered a 1-bar reversal because the buyers actually stepped in and pushed it all the way into the opposite direction, which means that was some extreme buying pressure. For this particular example, that was some extreme buying pressure. Now, if that candle was red, that would mean that at one point the buyers were winning, but the seller stepped in and pushed it the entire into the opposite direction. We pay attention to threes because let's say it did a 50% retracement, like it reversed 50% rather. Then you can probably say to yourself, there is a chance that this candle is getting ready to go 3. So that means there's a chance it could be going into the opposite direction. So while this candle was red, when it reversed 50%, you could have been looking at it saying, oh, this thing may go into the opposite direction. It could be getting ready to go 3. If y'all understand how the 1-bar reversal works. That's the best example that I can give.
Okay.
That's me. What's up?
I have one question and one favor. You want me to start with the question or the favor?
Let me see. Which one can I charge you for? So I can charge you for. No, I'm just playing. What's up?
You could charge me for the
Ask
favor. That's the thing.
me. All right, cool. What's up?
Is there any
Give
way
me-
like you can do a one-on-one sometime like after the times you have available? Because it doesn't work with my work schedule. I really want to do it.
Sure. Yes. What time are you thinking?
Whenever. If you're available today, I'm available today. But in general, after like 6:00 p.m. Pacific time.
Not today, but because I've done a bunch of one-on-ones this morning,
Yeah.
and then I'm
Okay,
teaching
I'll
right now.
DM
So
you.
today is no.
Yeah, I'll
But-
DM
but
you and we'll figure that out.
yeah, DM me. Yeah,
I
sure.
appreciate
I'm
that.
willing to do it. No problem.
Thank you. You're the best. And then my question is about the ATR. So
Okay.
let's say, for example, Apple is at 176 right now.
Uh-huh.
The ATR is $4. I'm just throwing out numbers I haven't checked.
Okay.
And my call trigger is at 177. Okay.
Okay.
So for my strike price, would I do 176 plus 4 or from the call trigger plus 4?
Okay. So
Like as the price target, you know what I mean?
yeah, I got you. So I think I probably confused y'all when I said this. So remember how I was like, for example, if I wanted to get into a day trade, I want to wait until we break above 176.65. And I'm going to get in right here. I'm going to get in as close to that point as possible, right? I personally like to enter 15 cents above the breakout. That's just a rule for me. I'm confident in doing that. That's just something that works for me. So I'm confident in entering 15 cents above the breakout, right? So that's going to put us at 176.80. Okay. So at 176.80, if you say that Apple has the ability to move $4, well, we would add $4 to 176.80. Okay. That's going to put us at 181. Well, there is no 181 for Apple. You have two options. You can average up or average down. Don't average up. Please don't average up, average down. You can't do 181, then do 180. You get what I'm saying?
Oh.
Are you there?
Yeah. Sorry, it was muted me. I couldn't talk.
No problem. But do you get what I'm saying?
Yeah, I understand.
Okay.
Thank you. Appreciate it.
No problem. Now he probably over there like, I'm gonna take this trade tomorrow. I didn't tell you to do that.
I'm gonna take Boeing. Boeing has a crazy ass setup.
Okay, all right, cool. Oh man. What's up, y'all? And what you gotta say? Who's on the mic with Rain K today? Ray, you like my rhyme? Bars. All right, we about to end this thing. We got 3 more hands raised. What's up, y'all? Come on.
Preston.
Why you sound like that? You sound very stressed.
Quashon.
Hey, Kay. So
Hey.
I had a quick question because this always confused me. If you wanted to take your stop loss at the low of the last candle, how would you do that? Because option contracts aren't necessarily based on the price of the stock. Get what I'm saying?
Okay. No, I don't. I'm not even gonna lie to you.
Okay. So like if you looked at the strat and it said your stop was at the low of the last candle,
Uh-huh.
how would you go about stopping at the low of the last candle? How would you do a stop loss for that?
You would have to set a mental stop loss. So
Okay.
yeah, so essentially you're paying attention to the chart. So if it breaks below, and let me pull it up so everybody can know what you're talking about. So okay, so for example, for a call, okay, so obviously we broke above right here, and essentially the strat says that this down here would be your stop. I'm gonna put that in yellow so everybody can see. So the strat says this is your entry for calls, and this would be your entry for puts. But if you get into calls, this would be your stop loss. This is where you get stopped out at. So I'm gonna reference the sheet so everybody can follow along. Where's the sheet? There it is. So you see how on here, let me expand it. You see how on here it says your stop is the bottom, like your stop is essentially where you would enter if it were puts, okay? You have to watch it, you know what I mean? You have to watch it, and if it goes to this point, you exit. Now, you don't have to do that. What if you're not comfortable stomaching this drop? What you can do is whatever you paid to get into that contract, let's say you pay $50 to get into that contract and you have a 20% stop loss, then you can go over to your brokerage, and if they do like dollar increments, or if you're able to type in what your stop is, if you got a 20% stop loss, then you need to get stopped out when it hits $40. If you pay 50 to get in, you need to be stopped out when it hits 40. Ray, am I doing that right? My brain is everywhere right now.
I don't even know what you were just
I
doing.
can't stand him. Does that make sense, y'all? I'm sorry. I know I'm all over the place, but like you can actually come in here and, for example, in Thinkorswim, if this thing loads, y'all know how my stuff be acting. Why is it doing this to me? You don't want to act right. Okay, so like if you pay, Ray, make sure I'm doing this right, because I don't do stop losses. Everything with me is mental, because I have the ability to watch the charts all day. So for example, you pay $20 to get in, maybe your stop is 15. You know what I'm saying? And obviously you wouldn't want to choose stop. Okay. And that's a way to do it. You got me? Are you there?
Yeah, I got you. So
Okay.
I was just trying to see if there was like a easier way to just use the stop loss feature, but it's more like you have to know or be watching to see when it closes below.
Yeah.
Yeah.
Or
Okay, cool.
or the cheat code could be you just come here and you set an alert on that level and tell, put a note to say, and matter of fact, don't even put it at that level, put it before it gets there and say, pay attention, you about to lose your money. You know what I mean?
Yeah.
An alert,
I got
right?
you.
Okay.
Yeah. All right, appreciate it.
No problem.
Homestead.
All right, I have a quick question, or really, it's it's something I want to do. So, I'd like to do a one-on-one because I have so many questions.
Uh-huh.
This is not the time to probably ask them because we're getting ready to close out. But I
Yeah.
do appreciate you and your time. Where could I go on Discord to schedule one-on-one, or how does it work? Because I'm pretty new. A friend of mine referred me to you guys, and I've been trading the last 4 years. And man, you guys are so thorough. I've learned so much in the last 2 weeks on the Discord and the books that you guys provided on the different styles of trading, whether it be scalping or day trading or swing trades. So I just wanted to know, I want to do more one-on-ones, and I'm willing to pay for it because you guys are really good.
Thank you. Thank you. So, all right.
Like
so
really good.
thanks.
I
Thanks.
blew a lot of money over the years trying to, get that. get
Well, we
these type
want
of
to stop you
resources. So
from doing that. We definitely want to stop you from wasting money. So look, this is
Yeah.
where you can go. So if you can see my screen in the provider
Mhm.
resources channel, this is where
Okay.
any content that we have as providers that we sell, like if it's our courses, Ray has a
Mhm.
course, I have a course, Key has a course. So if it's any courses that we have, it's going to be in provider resources.
Okay.
Our one-on-ones are in here. Ray offers one-on-ones. Where's Ray's one-on-one? Did I pass it? There it is. He doesn't like to put stuff in bold letters, but I do. So here's Ray's one-on-one. So you might miss it, but
Okay.
it's here. And here's mine. Now I'm gonna be honest with you. 15 minutes. Do not book a 15-minute with me unless you just have to ask me a really quick question. Okay.
I would never do that. I was
Okay.
looking for the longest one. I
Okay.
went straight to the 1 hour because that's
All
not
right.
enough. But I'll take an hour of your time.
Yeah, and 1 hour goes by super, super fast. So I had a bunch
It
of
really
people,
does because I used to do those.
yeah, I had a bunch of people who come back to me a lot, right? And it was like, oh man, I wish you did, blocks of time for the people who kind of need some type of mentorship or whatever. So I
Yeah,
offer
that's what
those
I'm
at a
looking for.
discounted rate. Yeah, so it's here. Just click here to book, click here for Ray, and bam, there it is.
Okay.
Oh, and
Got
Michael
it.
Crow them too.
What was the last part? I missed it.
I said Michael Crow offers them too. Michael Crow is
Okay.
missing action. He's an actor, so he's doing his thing, making us
Okay,
all
'cause-
proud right now.
Right, because what I'm looking to do is I'm looking to follow kind of like a schedule, like
Yeah.
whether it be once a week, twice a week,
Mhm.
and this type of topic and from A to Z, so I could really, not just take a chance
I feel
based
you.
on the limited knowledge that I have. So, and I want to start from scratch. Just scratch, even if I already know it, clear my mind because that's what I want to do. So, okay, I'll do that. I'll look into that and start.
No
I'm gonna
problem.
start filling up your spots. Thank
Yeah,
you.
and
That's all.
look, I'm telling y'all, the one-on-ones book up fast. I just started offering them, I think 2 months ago, maybe 2 or 3, and they book up really, really fast. So, and you guys have to think I'm only one person. And then I have to teach in the community along with Ray, and we have to call plays, and then we have to, be parents.
Yeah,
And
that's true.
so they
That's
book
true.
up
Okay.
fast. Let you know, just the FYI.
Okay, will do. Thank you.
Can I say my rap one more time, Ray? Hey, mama.
No.
Okay, I figured it was a no. Ray always sounds sad. Like that's his one